Hello there, hope you're doing well. This is Kevin Cameron, and we are launching version 2.0 of the PPP Loan Expense Tracker and Forgiveness Calculator, and this is our first how-to video for that version 2.0. I think you can see on our screen right now the current version of the expense tracker. We left off with version 1.9, which was updated through roughly August of last year. With some IFRs and FAQs that the SBA had issued. And then we went for a long period of time without a whole lot of guidance or any new guidance. And then, of course, we had a flurry of a new tax law or a new law that was signed on December 27th by the president. And then the SBA has issued new forgiveness application forms and new IFRs, actually quite a few IFRs. Most of the IFRs that the SBA has issued are a culmination of prior IFRs, putting them in together into one spot, if you will. So when you might see that one is 62 pages long or 84 pages long, it's not all new data. It's a funneling of prior advice or guidance put into one spot. We always start at the beginning with these trainings, and the beginning is always the first tab of the PPP Expense Tracker workbook. So that's where I'm starting here. This is your landing page. You'll always see at the top here what version you're looking at or what you're working on. Most versions up until 2.0, you could copy and paste data very easily from one version to another. You can still do that with the version 2.0 from 1.9, but you don't necessarily need to use 2.0 going forward for any first round PPP loans. And I'll explain that in a minute. But what we have added here are direct links. If you click here, it'll take you directly to the SBA's website, which is the PDF for these most recent IFRs that were issued by the SBA, those being on January 6th, 2021 and January 20th, 2021, which was yesterday. We're taping this video on January 21st, 2021. This workbook does include the most current guidance issued by the SBA, including the second round loans. And I want to point out that this workbook can be used for both the first round PPP loans and the second round PPP loans. And I'll explain that a little bit more as we go along here. There's always going to be guidance on this page that's going to be updated for wherever we are currently. So we do know now that the covered period that you select can be anywhere between 8 weeks and 24 weeks. The SBA had actually given us that advice and that guidance a long time ago, believe it or not. But for whatever reason, the lenders were not really paying attention to that guidance and adjusting their records for it. So many people found that when they applied for forgiveness, they really only had a choice between 8 weeks and 24 weeks. Now we know we can fall in between the 8 and 24 week period. So that's one thing that was substantially different. The other thing that the SBA eliminated in the current guidance is that old alternative payroll covered period. If you recall, if you paid your payroll bi-weekly or more frequently, that you were allowed to adjust your covered period to an alternative payroll covered period. Because of the expansion of the covered period to up to 24 weeks and the clarification of the paid and incurred language when it comes to your payroll, I believe the SBA just felt this was no longer really necessary, and they have eliminated the alternative payroll covered period. If by chance you filed your forgiveness application using the original alternative covered payroll period, they're not going to make you change that, I don't believe. So you're okay as far as that's concerned. Like I said earlier, the SBA did issue brand new forms yesterday, forms 3508, which essentially is the long form application, 3508S, which is the simplified version, and 3508EZ, which is an easy version. And we'll go over each one of those in this video fairly quickly, but we will. If you look at the tabs at the bottom, you'll see that our quick reference guide for the various limitations for compensation and retirement plan contributions and so forth is still in here. The vast majority of this guidance hasn't really changed. There was one change in the new IFRs that I'll mention in just a moment. It's a change we had already expected and had been pretty much advising people on all along. So there's really no difference. It's just now we know the SBA is telling us that we can do that, and I'll cover that in a second as well. We have additional guidance here on the FTE reduction exceptions. There are so many of them, and that's been very, very confusing for a lot of borrowers. So we put a lot of the guidance for those rules right here on this page here. So the first 3 pages are informational only. The expense tracker is essentially in the same form it was originally. The only difference now is that it can handle an 8-week or 24-week or any period within that time frame for your covered period. So I'm going to show you a sample here because it's always easier to see numbers in the workbook than just blank lines and blank cells. So in this particular case, we're going to be dealing with a company called Sample Company, and they received their original loan on May 4th, 2020. And again, it isn't going to matter if you're using this for your first draw loan, or your second draw loan. So don't get too confused with that. Obviously, you'd want to have 2 separate workbooks for each one of the loan calculations. Don't try to combine them. So in this particular case, by putting in the loan date, remember the start of your covered period is always your loan funding date. If the loan is approved on Thursday and funded on Friday, your covered period starts on Friday. That's the trigger. And it doesn't matter what time of day it's funded. If it's funded that day, that's the first day of your covered period. So in this particular example with Sample Company, they are going to choose to make August 16th the end of their covered period, which is the end of a 15-week period. The workbook will automatically calculate the number of weeks. You'll get an okay here if you have calculated any period of time less than 24 weeks. So that's the purposes behind that calculation there. It's just to add some guidance. But keep in mind that you want to pick a covered period that best suits your needs to maximize your loan forgiveness. So for example, if you have a FTE reduction quotient that's substantial, you might want to extend out your covered period to have enough expenses to fulfill 100% loan forgiveness, even with a substantial FTE reduction quotient. So again, I'll talk about that a little bit further when we get to the Schedule A. The other thing I want to point out right here, which is a significant change in the rules as they relate to the PPP and the employee retention credit. The employee retention credit was a credit that was provided to certain businesses that continued to pay their employees, in some cases, even if the employees were still working in the business, during any time in which the business was shut down due to a government order. And that shutdown could be fully or partial, by the way, or if the business sustained a substantial drop in its revenue for the quarter. That substantial drop is measured as a 50% or more drop. If the business qualifies for the employee retention credit, then you will want to analyze that before you do your PPP forgiveness, because the IRS and the SBA has told us that you cannot use the same wages for your PPP forgiveness that you use for the employee retention credit. And why this is so important now is because under previous guidance, the employee retention credit was not allowed to any business that made a PPP loan. So if you had a PPP round 1 loan, you were automatically disqualified from claiming the employee retention credit. The new law that was passed has changed that. And now you can go back and claim the employee retention credit back into 2020. The IRS is going to issue some guidance on how to retroactively claim that. I imagine it's going to be involve filing a amended payroll tax return or some type of claim of refund. But the point I want to make to you right now is that you're really going to want to analyze that and whether or not you qualify before you submit your PPP forgiveness. Now, if you have already submitted your PPP forgiveness and you're looking at this video maybe for a round 2 guidance, then you might want to go back and look and see if you did qualify for the employee retention credit. And if you did, quite possibly amend your forgiveness application. Again, the SBA and the lenders are going to provide us with some guidance on how to amend a PPP forgiveness application. So let me give you a really quick example on why you might have to do that. Let's say that you are a borrower that originally used an 8-week covered period, and so a long time ago now, several months ago maybe, you have submitted your forgiveness application and possibly gotten it approved by both your lender and the SBA. So now you look back and you realize that you qualified for the employee retention credit during that 8-week period. It might be possible for you to go back and amend your forgiveness application, expand your original covered period to count more payroll to cover the forgiveness application, and take the payroll out of the forgiveness application that is available for the employee retention credit. So that's all I'm going to go. I'm not going to go any further in that because that's not the purpose of this video, but it's very important that you don't go any further with your application for forgiveness until you evaluate that the application of the employee retention credit for your particular circumstances. We also know something by yesterday's IFRs that we suspected all along, and that is that if you select a covered period of less than 24 weeks, you will be required to prorate the wage caps for both the owners and the non-owner employees. The owner employee's wage cap is capped at 2.5/12 of $100,000 of compensation, not 24 weeks worth. So in a lot of cases, even if your covered period is less than 24 weeks, you'll find that you still get the full owner's cap. So in my particular example here in Sample Company, you'll see that their covered period is 15 weeks, but they do get the full 20,833 wage cap for an owner employee. But you'll see down here for a non-owner employee, their wage cap is going to be prorated for their specific covered period. So if you are up against caps with your employees, you might have to extend your covered period to be sure that you get the full amount of payroll covered. I don't suspect that's going to be a significant issue for a lot of borrowers, but that might be one reason why you'd want to extend your covered period further, maybe even up to the 24-week maximum. If your loan amount is under, or $150,000 or under now, that's a new rule that changed also that will allow us to file the Form 3508S. Now, in our workbook, you will not see a Form 3508S. And the reason why is because there's really no numbers on that 3508S. That's a form in which you are self-certifying that you used all of the funds, you've done the necessary calculations, you've retained the necessary documentation to back up your loan forgiveness calculations, but you do not submit that information to the bank or the SBA. You must retain that information because that loan is still subject to audit and review by the SBA. We've included here on the workbook a hyperlink to the Treasury's website that contains the instructions for that Form 3508, so you can easily refer to that during your process of completing your forgiveness application calculations. I want to emphasize real quickly that the filing of the Form 3508 is available to millions of business owners because the average PPP loan was well under $150,000. So the majority of small businesses are going to be able to use the simplified form to make the application. It does not, however, bar you from following and applying all the rules that still apply to the original PPP loan and the forgiveness. So be sure that you do your calculations, you have used the money, you're ready to file your forgiveness application, and then you'll be good to go. The expense tracker hasn't changed. The only thing that's different here is that we've added some additional guidance. We know now that the employee benefits that you're allowed to use for loan forgiveness are group health, life, disability, vision, and dental insurance plans. The emphasis here is on group. It does sound like that the SBA finally clarified that these insurances must be under a group plan. So there's some additional guidance that we have there. You'll notice that if you hover over any light yellow cell, there's going to be guidance listed here. Some of it's going to be directly from the SBA instructions or IFRs. Some of it's going to be commentary from myself. Rely on that information, but be sure that you always double check your numbers and the rules that relate to you. Now, when we go into the payroll costs here, nothing's really changed from the original guidance, except, like I said, for the employee health insurance. The additional categories that we have now, besides interest on mortgages that were in place as of or by February 15, 2020, before February 15, 2020, that is, rent or lease payments and utility payments, which we've gotten some clarification on that. We have 4 new categories of expenses that the new law is allowing us to use for forgiveness for both PPP round 1 and PPP round 2. And the reason why that's really important is because you can actually use those expenses that you would have incurred last year in your round 1 loan, but the old version of this workbook did not have a category or a column for those amounts. So if you did have those types of expenses with your PPP round 1, you're probably going to want to add those into the original workbook that you've used or use the more current version, which is 2.0. The guidance on these particular items are really limited. All we really have right now is the new law and the SBA IFR, and the SBA IFR is literally a mirror of what's stated in the law. So we really haven't gotten any frequently asked questions or further interpretations on these 4 categories. Some of it is pretty straightforward, some of it's not. So I think we're going to be seeing some additional guidance on these categories going forward. But for example, under operations expenses, there it's going to be for software or cloud computing services that the business had to acquire during 2020 or even 2021 that helped them in their operations. And it could have been anything from sales to accounting to HR. So for example, if you had to acquire a software license to use for remote access or uploading data to a shared site or saving data, computer data to a cloud, all those fees and costs that you've incurred for that are now permitted expenses to use for the PPP forgiveness. The other category is kind of interesting. It's for property damage costs, and it specifies it's for vandalism and looting damages that you've incurred due to public disturbances that were not covered by your insurance carrier. I don't think we'll have a lot of that, but certainly due to some of the social unrest we had during 2020, businesses did incur some losses here. And I think that was Congress's way of trying to help them out, that they were able to use the PPP money for those types of expenses. So that might help certain business owners. The category for supplier costs is a little bit gray, and we're still waiting to get some guidance on it. But it seems like it's for additional costs incurred by the borrower paid to the supplier of goods for the supply of goods that were essential to the operations and were made pursuant to a contract or a purchase order that was in effect prior to your covered period, or with respect to any type of perishable goods in effect at any time during your covered period. So there I would see maybe supplier costs for a restaurant that may have incurred additional supply of goods costs. I believe that's what that type of category is going to be applicable for. The next category is for worker protection expenses. And there they gave us a little more guidance, and you can see that the guidance that I've got listed here is a little bit more detailed. And there it's going to be any type of expenses that a business has incurred to provide worker protection or safety as it relates to COVID particularly. So those could be things like masks and PPP, plexiglass sneeze guards or protection guards, even things like a drive-through, any type of expense like that, those items are now going to be considered qualified expenses for the PPP funds. The workbook on this page for the expense tracker still has a hyperlink to the loan forgiveness application instructions that provides you with the details of what you need to keep for backup documentation. So that's good. That's a good handy reference to have as well. So in this particular example, getting back up here with Sample Company, their loan was $250,000. Now I haven't listed in here all the expenses that were paid throughout the covered period. You could certainly do that. The purposes of this presentation is to really show you how the math works. But in this particular circumstance, this company has payroll, and I pretty much listed an amount for every expense category so you can see how the math works. The expense tracker also has at the bottom a reconciliation. And that reconciliation is needed because up here where you enter the payroll, you're going to enter the gross payroll for the pay period or the covered period, and it's going to be the total gross payroll. But we know that we have limitations. We have both limitations of compensation for owners and for non-owner employees. And so the bottom section here is a spot where you can put in the excess wages paid to anybody who was on salary of $100,000 or more during 2019 or an owner employee. And so by putting that number in there, you're netting down to what the amount of payroll costs you are actually allowed to use for the loan forgiveness. And there's a purpose behind this, and I'll show that to you in a minute. If you go to the PPP Schedule A worksheets, now this workbook or this worksheet matches what is in the PPP forgiveness application instructions. It's a little bit expanded because it helps you calculate your FTE requirements. So for example, we have table 1, which matches table 1 of what's in the PPP Schedule A worksheets and the instructions. We have table 2, which is for employees that were on a salary, annual salary of more than $100,000 for any part of 2019. So those are the two different tables that you'll see in the forgiveness application instructions. We've added a third table, if you will, and it's for the owner employees. And the reason why we added this is because the PPP forgiveness application instructions does not provide a table for the owners, but it's nice for you to keep track of that and to help you balance your total numbers out in the forgiveness application. So we've added that here. I'm not quite sure why the SBA didn't require you to provide the owner information like you have to supply the employee information. We don't know the answer to that. So in this particular example, the main difference that you'll see is that now we have a limitation of wages by employee based on your particular covered period. So what you'll have to do is when you enter your employee wages here for the covered period, if the wages paid to that employee were greater than the maximum allowed, which is the calculated amount for the prorated cap, then you'll have to enter the cap amount. So it's either the actual or the cap amount. So that's a little bit different than the original workbook. And then you will identify whether or not the employee is a full-time employee or an employee that didn't work full-time. Full-time in the eyes of the SBA is somebody who averages 40 or more hours per week. So that's really means full-time. If the employee worked fewer than 40 hours or more a week, then they're technically considered, I guess, part-time, but they might not be necessarily even part-time. Maybe they just didn't average that 40 or more. So in those cases, those employees, you have to list their hours here for the number of hours they worked during the covered period. There is an alternative measurement for FTEs, and that is the 0.5 for all part-time employees and the 1-time or the 1.0 for all full-time employees. So if you were to use the alternative, you would have to put in a yes here for all employees. And let me stress that for a minute. The alternative measurement of 0.5 for all part-time employees and 1.0 for all full-time employees if you use it anywhere, you use it everywhere. So just keep that in mind. You can't use that for a reference period and not for your covered period, and vice versa. The SBA wants you to be consistent with how you use that form. If the employee was subject to a salary or wage reduction of greater than 25%, and that's in their wage rate, not in their hours or their total wages necessarily. So for example, if you have a full-time employee that was being paid $1,000 per week pre-COVID, and during the COVID, or during the covered period, if you will, you reduced their salary to $700 a week, but they were still working 40 hours a week, then you have a greater than 25% pay reduction to that employee, and you have to calculate what your penalty, if you will, is for that. And we'll get into that in just a minute. That's only on employees that were making less than $100,000 per year or were not employed during 2019. And then for employees with an annual salary of more than $100,000, you still calculate their FTE, but you'll see that there is no column down here for pay reductions because those employees are not subject to the greater than 25% pay reduction penalty, if you will. And then down here in the employer or owner employee section, we've got a section where you will list the employer's actual compensation for the base year in which the loan application is made. So the reason why that's in there is because PPP loan application, or PPP round one or draw one, would have been likely based on the 2019 payroll. PPP round two can be based on 2019 or 2020. So that's why we have to look at what year now we're using. So keep that in mind. And the reason why we have to put this number in here is because our cap for our employee is going to be based on the actual cap, in this particular case, to $20,833, because the covered period goes beyond 2.5 months, or it's going to be based on the number of, it's going to be based on 2.5/12 of the prior year compensation. So for example, if I put 100,000 here, then the cap is still 20,833, because 20,833 is 2.5/12 of $100,000. But if this particular owner was only paid $75,000 in the base year, you'll see that they don't get the full 20,833 cap. They get a prorated cap based on their prior year compensation. So it's really important that you use the right amount of compensation in your calculations for loan forgiveness. Don't automatically assume that you get the full 20,833 for an owner employee in the PPP loan forgiveness if their compensation wasn't sufficient to justify that. And I've seen a lot of places where people are making that mistake. Sometimes it gets caught by the lender when they review your application, and sometimes it doesn't. So you'd want to make sure you get that correct. Bottom of section of this worksheet on the PPP Schedule A worksheets, again, this kind of mirrors what is in the SBA instructions, is the calculation of the safe harbor number 2. Ironically, this was the original safe harbor, but somehow it ended up being called safe harbor number 2. Safe harbor number 2 simply says that during the period of February 15th, 2020 to April 26th, 2020, I reduced my FTEs, I reduced my full-time equivalents. And then compared to what I had as full-time equivalents on February 15th, 2020, if I have a reduction here, I might be able to use the safe harbor number 2. Safe harbor number 2 says that if you restore your FTEs as of the date of you're submitting your forgiveness, and there's some additional guidance on here, then you will be able to show that you got your employees, your FTEs, back up to what they should be prior to COVID, prior to all the pandemic, which is the date they're using is February 15th. And if you were to have that, you would meet the safe harbor for measuring FTEs, and you wouldn't have an FTE reduction quotient. In my particular example here, I forced it such that they they didn't get the safe harbor because I want to show you how all the math works. All of these safe harbor calculations can be manually done by you. That's what we're telling you here, or you can actually key them in. If you go to the FTE for safe harbor, it's a separate worksheet. Here you can calculate all of your employees' FTE calculations for the February 15th period, which is one of the reference periods, and the February 15th to April 26th period. And then your safe harbor measurement is going to be a very unique date you have to be very careful of. If it's for PPP Draw 1 loans, the measurement date for the safe harbor is your loan forgiveness application date or December 31st, 2020. So for example, if you submitted your loan forgiveness application on November 30th, then you'd use November 30th. Now, odds are if you're watching this video, you probably haven't submitted your PPP round 1 loan forgiveness yet. But if you hadn't, then you'd use December 31st. For PPP round 2 loans, those are loans that are made on or after December 27th, 2020, which is the date the law became effective. You're going to use a date that is not later than the last day of your covered period. So for example, if you've restored your FTEs by week 20, then that would be the date you would use. If you haven't, then you would obviously use the end of your covered period as your restoration date to see if you qualify for the safe harbor. Again, I think the purpose behind this is for the SBA to prove that the PPP program was successful, and businesses that reduced their FTEs and then turned around and increased them at some point did what they were supposed to do with the PPP money. I believe that's essentially the thought process behind that. If we go back here to the PPP Schedule A worksheets, you can see that all these numbers, they come over directly from that safe harbor calculation. You don't have to use the safe harbor calculation. If you know your FTE measurements for these particular periods, you can manually key them in here to the spreadsheet. Once you finish the PPP Schedule A worksheets, you're going to go to the PPP Schedule A. Now the PPP Schedule A section, all the data comes over from your input. So you're doing less input on this screen. As a matter of fact, you're not putting in any dollar amounts. All of those amounts come in here from your prior input, either the PPP expense tracker or the Schedule A worksheets where you enter the compensation. And as I mentioned earlier, if you recall, that on the expense tracker, we have a total adjusted payroll line, which is down here. And the purpose for that is that we want to make sure that on the PPP Schedule A, that the amount of compensation that flows to the Schedule A worksheet from the prior worksheets balances. And so you'll see here this message here that says my payroll per my expense tracker agrees with my payroll per my PPP Schedule A worksheets, and so therefore I'm in balance. Now I want to point out that if you don't use the expense tracker, which you certainly don't have to use, by the way, but if you do use the expense tracker, then you'll get this message if you're not in balance. If you don't use the expense tracker, you're going to get a message that you're not in balance. You're going to want to disregard that. You can even overwrite the cell if you want to. This is probably a good time for me to let everybody know that we don't protect any of the cells or the structure of this workbook. That's primarily so that you can edit it easier. If you're a professional that you want to use this for clients, you can change our name or take our name off of it. You can put your information on it and use it for your own clients. If you're a small business owner, you want to take that information off, that's fine too. You can submit this workbook to your lender. I've had a number of clients and people I've worked with on PPP loan forgiveness do that with a great deal of success. So that's a good sign. Getting back to the PPP Schedule A, in the bottom section, again, it matches pretty much what's in the forgiveness application instructions published by the SBA. You will have a couple additional sections to fill out. And it's important to remember that we've got a reminder here that you want to make sure you always do the PPP Safe Harbor 2 FTE calculation, which is in this tab here, which we just went over a moment ago, before you do any section down here. And the reason for that, it's kind of counterintuitive, but if you qualify for the PPP Safe Harbor 2 FTE computation, then you're going to get 100% FTE reduction quotient, and you won't have any reduction to your potential loan forgiveness. So then completing the rest of this section would really be a moot point for you. But if you don't meet the Safe Harbor 2 FTE computation, then you're going to want to fill out this section on this worksheet here. And the first two items here are, they were added later in the process. They've been around for a while now. But the first one is, if you're a business that really never reduced the number of employees or the average paid hours of your employees throughout this whole process, then you're not going to have to worry about your FTE calculations. You've got to provide proof of that, or you've got to maintain proof of that stipulation. So if you can prove that, you answer yes here, then you're done. You don't have an FTE reduction quotient to even worry about. There's a Safe Harbor number 1, which says that you are unable to operate from the period February 15, 2020 to the end of your covered period at the same level that you were able to operate on February 15th, 2020, because you were following guidance issued or an order issued by a state or local government, it could be county or city, that was relying on guidance from the CDC, the HHS, or OSHA, stipulating rules of operating your business. So for example, if you operate a dental practice in the state of Florida, all dentists were ordered to shut down non-essential dental services for a period of time during the initial period of the pandemic. And so because that was likely during the period February 15th on, including at some point during their covered period, if you will, then they automatically don't have to count their FTEs any longer, so they can answer yes to this. So the one thing I want to point out here is that I've heard a lot of people tell me that they think they qualify for this because their business or a related business that affects their business was ordered to shut down. Be really careful with that. Make sure that you have sufficient guidance to rely on this in case the lender or the SBA come back and ask you to prove that. Let's say, for example, you don't meet either one of these qualifications, so we can continue to show you how the math works. So once we know that we don't meet the Safe Harbor number 2, and we don't meet the first FTE reduction calculation exclusion, and we don't meet Safe Harbor number 1, now we have to calculate what our FTEs are for our reference periods. The reference periods remain February 15th, 2019 to June 30th, 2019, and January 1st, 2020 to February 29th, 2020. Those have not changed for the PPP Draw 1 or Draw 2 program. We've got a workbook in here, a worksheet in here that helps you calculate that, and they are here. It's called the FTE Calc for Schedule A. And here you can calculate what your FTEs were for these 2 reference periods. And for seasonal businesses, there's an actual third reference period, if you will, and that's based on the same 12-week period in 2019 that you used to obtain your PPP loan. So if you were able to obtain your PPP loan as a seasonal business, that's the measurement you would use. You do those calculations on those pages, and the numbers will drop over here automatically, and they'll tell you what your FTEs are for these reference periods. If your business is seasonal and you answer yes here, the amount from the worksheet that you've completed will fill in here as well. That's from there. If you're not a seasonal business, which most small businesses that got the PPP loan are not seasonal businesses, the formula in the instructions will tell you to use the lowest FTE calculation for whichever period provides the lowest number, if you will. So in this particular case, in this sample company's case, their reference period FTEs are 9.1. If you remember back over here that there were their FTEs for these measurement periods are here, and then you'll see over here that the average FTEs, which come from up here, are, let me point that out to that's the average FTEs there for from worksheet table number 1. That's the FTEs for worksheet table number 2. You'll notice that the compensation for owners is listed here, but there's no FTE calculations provided for owner employees. Keep that in mind. You do not provide any FTE calculations for owner employees for both the reference periods or the covered period. Once you calculate what the average FTEs are for the covered period, we will compare that to the reference period FTEs, and that'll tell us what our FTE reduction quotient is. But before we go any further, I want to point out that there's a lot of FTE reduction exceptions, and they're all listed here. These are all relatively added after the original CARES Act was passed. That certainly helped a lot of businesses. I've seen businesses that had a 40 or 50% decline in their FTEs, and then when we really broke down the math, we realized that their decline was more like 10% because a lot of their declines were qualified FTE reduction exceptions. So in this particular case, I'll show you how the math works. Let's just say that this particular company terminated one employee during the covered period, but then tried to rehire that person or a similarly qualified person, and they weren't able to. They submitted an offer to rehire somebody. That person rejected that offer. They weren't able to find a similarly qualified person. They're going to, and in this particular example, that person was a full-time employee. They're going to get a 1.0 FTE for that person, and just that one employee would take their FTE reduction quotient up to 100%. So you can see that it's really important that we don't ignore these, that particularly if we've gotten this far in the process and we're still trying to determine whether or not we have an FTE reduction quotient to deal with, then we want to make sure that we explore those. In Sample's particular case, again, I wanted to force the numbers to show you how it works when there is a FTE reduction quotient of less than 100%. At this point, we can actually go to the forgiveness application. This page, I'm sure you'll take a sigh of relief, does not require you to enter any data whatsoever. So this is strictly a formula result of all the previous data that you've supplied. So this page mirrors the forgiveness application form that currently is published by the SBA. And it brings over your payroll costs, your mortgage payments, mortgage interest payments that is, your rent or lease payments, your utility payments, and then our 4 new categories, which for some reason they're all called covered. Covered operations, covered property, covered supply costs, covered worker protection expenditures. Those total expenses here are your total qualified expenses for your particular covered period. And then we have a salary reduction penalty, if you will. This number reduces the amount of allowed expenses you're going to be able to provide as for the forgiveness application. Before we go any further, I'll take you to that workbook real quick, or that worksheet real quick. It's right here. And so in this particular example, I'm just going to show you real quick, this particular employee here was on a salary pre-COVID of $98,000 a year, full-time employee. The company said, we have to reduce your salary to $62,400. Because they were under $100,000 a year annual salary, we have to calculate what the penalty is, if you will, for cutting their pay back. So the first thing we do is we're going to calculate whether or not you've met the safe harbor. And the safe harbor is that if you raised this employee's pay back up to their regular salary, or at least 75% of their regular salary, before December 31st, 2020, or your forgiveness application date, or the end of your covered period for the second draw loans. If you did that, then you would meet the safe harbor and you wouldn't have a penalty. In this particular case, we're going to say that they never raise the employee's pay back up. Then we're going to calculate whether or not there is a potential penalty. And what we do is we multiply their regular salary by 75%, and we can see that that number is greater than what they're getting paid now on a salary. So there is a reduction of more than 25%. Then we're going to calculate what the penalty is. Now, in this particular case, this employee is a salaried full-time employee, so we are calculating it based on a salary. If they're hourly, then you would put in some more information here to calculate what the hourly effective 25% or more reduction is. In this particular case, we're going to calculate that this employee's salary reduction of greater than 25%, that amount greater than the 25% reduction for your particular covered period, which is going to be based on the number of weeks that are in your covered period, is the amount of penalty, if you will, that you will have to reduce your covered expenses by. Now, in this particular case, the reason why I want to put a number in here is a lot of people believe that that amount reduces your loan forgiveness. It doesn't. It actually reduces your covered expenses total. So it's possible that you could have a salary hourly wage reduction penalty, and I do call it a penalty. It's not called a penalty on the form. You could have that and still achieve 100% loan forgiveness. You can actually also have a FTE reduction quotient of less than 100% and still achieve 100% loan forgiveness, because it's really all about timing. So in this particular case with Sample Company, their adjusted total expenses that they can use for the forgiveness application are $306,862. Their FTE reduction quotient came in at 91% because they never met any of the safe harbors. So in this particular case, they could achieve a loan forgiveness amount of $279,885. You'll remember their original loan amount was $250. Since the adjusted total is greater than the loan amount, they're going to get 100% of the loan forgiven. So the whole purpose of this exercise is to give you an example of how you don't necessarily have to follow all of the rules. You don't have to get back to 100% of full employment. You don't necessarily have to raise employees' pay, although we haven't seen a lot of businesses cut employees' pay by more than 25%. If you did that, it doesn't necessarily mean that you're going to have a reduction to the actual loan forgiveness amount. So we stop there as far as the calculation is concerned. Excuse me, the line number here, that's at 60% payroll cost. I want to point out real quickly that your FTE loan forgiveness is going to require you to use at least 60% of your PPP money on qualified payroll expenses. So in this particular case, based on the payroll amount that we calculated, our maximum amount of loan we could get forgiven would be $430,106. Well, clearly our loan wasn't even near that amount, so we're fine and we still get the full $250 forgiven. If our loan was over that amount, then we would have to pay back part of the loan because we haven't used it all up in our calculations. We do produce a forgiveness application 3508EZ. EZ was the form that came out later that allowed us to kind of simplify the application. It made us still need to calculate the loan forgiveness amount based on our expenses we incurred, but it gave us some exemptions on the FTE reduction penalties, if you will, or reduction quotient. You'll see that there is no FTE reduction quotient on the EZ form because you either qualify because you're a self-employed person and you meet that requirement, or you are a company that did not reduce any effective pay rates for your employees during the applicable period, and you did not reduce the average number of your employees paid hours for the applicable periods. Or you could be a company that did not reduce any effective wage rates or pay, and you were unable to operate your business during the covered period because of an order sent based on guidance from CDC, HHS, or OSHA. So if you meet one of these requirements, you can file the 3508EZ. I think what we're going to see is that we're going to see more businesses filing the 3508S because they increased the threshold for filing that form from a $50,000 PPP loan up to a $150,000 PPP loan. So I think we'll see the vast majority of borrowers completing the S form, and then probably the regular form, and then maybe the EZ form for a larger company that might have a larger loan, but they meet one of these requirements or qualifications to file the EZ. So always check first to make sure that you have a way of avoiding the FTE calculations. And what I mean by avoiding is you meet some qualification for that, whether it's one of the ones from the EZ or the safe harbors that we mentioned earlier. A lot of people will calculate FTEs and get bogged down in the FTE calculations only to find out later on that they never really needed to calculate FTEs in the first place. So I always kind of tell people, kind of begin with the end in mind as far as the FTE calculations are concerned. Do you even need to calculate FTEs? And then if you do, rely on the worksheet to help you do those calculations. The workbook still has a report letter in here. The report letter can be used by a borrower who wants to provide that to their lender. It's designed primarily written to you as the borrower. If you're a financial professional, it's a good document to use to summarize the information that you give to your client if you're doing it for a borrower. So that report letter is still in there. I hope this is helpful. We're going to continue to provide webinars and continuing education. We're probably going to go back and resume our weekly PPP updates now that we've got round 2 up and running. So I hope we'll see you again soon. Thank you and take care.